Thank you, Matt, for this opportunity. My name is Hemant Seri. I'm the founder of Zero Circle. We are a climate fintech startup focusing on green financing. The problem today is that there's a lot of capital that's being created and issued by governments, institutions, etc. And that capital has, a lot of the organizations that are looking to use those capital have a tough time trying to, kind of access it as well as get qualified for that capital. And so the challenge is that, while there's enough of, funding being floated around by large organizations and institutions, specifically governments and privates, there's not a good way for these organizations to qualify for it. If you look at the landscape today in the green loan space, in the large segment, there's these things called the green bonds, where large institutions like JP Morgan, Credit Suisse, Wells Fargo, et cetera, have created these programs to issue $50 million of loans for these green projects. There's a lot of programs at the micro level for microfinancing and for kind of these mom and pop shops in various parts of the developing world. But what is missing is this middle tier where, if you're a $250 million business and you're trying to use kind of transform to a net zero organization, there's not a lot of good ways for you to get access to sustainable financing. So this is where Zero Circle can come in and help. What we've been trying to create is essentially a marketplace to allow and simplify access to green loans for the mid-tier segment. The idea is for allowing organizations to qualify for financing based on certain criteria provided by the financial institutions and align it with their loan requirements and theses that can be basically customized on an institution basis. And then once the loan has been issued, we essentially will work with the organization to monitor ongoing sustainable goals and KPIs as part of the loan covenants and the loan requirements to meet net zero goals. The market for this is pretty huge. Every day we hear some government institution issuing green financing, private organizations starting to create green bonds and green capital. And the most recent estimate from McKinsey says that there needs to be an incremental of about $3.5 trillion in capital that has to be created over the next 30 years to really meet our net zero goals by 2050. But today, there's only 4% of actual funds are in the green finance space, and there's also significant overhead for mid-sized organizations to track and monitor this. In addition to that, most of the organizations that essentially emit scope 3 emissions actually sit in the supply chain, and they are essentially those small and mid-sized companies that companies or enterprises work with. The market opportunity is pretty large for this. There's trillions of dollars at the lending market and the sustainable finance market that are being kind of are projected to grow at 20% CAGR. And what we are expecting is to essentially allow our platform to transform about $1 trillion in capital over the next 5 to 10 years. And this anticipates for us about a $2.7 billion market opportunity. The way we are doing this is by creating this sustainability network. We are connecting financial organizations, financial institutions, organizations, and their suppliers together. But on top of that, layering third-party data, self-assessment and third-party assessments into this ecosystem to automate and simplify this reporting guidelines. So the output of this basically creates, your profile, your factors, and your report, which the institutions can use as part of their assessment decisions, and then organizations can use as part of ongoing tracking and monitoring of their sustainable activities. Today, we have the MVP of the tracking system and the monitoring system live for organizations, and we are in the process of piloting a couple of different measuring and reporting approaches for a couple of different pilots. And in the process, we are actually working, talking to a number of finance institutions to partner with them on the financing side right now. The marketplace is still very early and very nascent. As I mentioned earlier, there's a lot of activity happening in the large tiers in the green bond space, But as companies start to move to the mid-tier and the smaller segments, there's definitely a couple of companies that are starting to create some of these marketplaces and create these opportunities for standardized frameworks that organizations can use as part of qualification for financing. So where we are looking to kind of work with and look at this market is around basically building a marketplace, but focusing more on the operational activities for these organizations and quantify and qualify them for the financing. Since we started last year, we built this AI-based platform to create reporting frameworks to quickly and automatically build out a sustainability report. Now we are building out the measuring capabilities for the carbon emissions and greenhouse gases. We have a couple of LOIs signed that we are piloting with them. And we have a number of different data partners that we're working with as part of this overall assessment approach. In addition to that, we have done a number of outreach to organizations to start building up a pipeline as we scale the system and build out the platform to bring a lot of these small and medium organizations into the fold.
1 minute warning.
Our pricing model is fairly straightforward. There's about $1,000 a year to $500,000 to $1,000 a year for organizations to be able to track and report and monitor their sustainable activities on the platform. And we're targeting the logistics and construction industry specifically at the start of it. And for financial institutions, it's a transaction fee based on the loan and the amount of the loan value issued for the institutions. We have a strong team that's focused on this. My background is I used to be the head of product at Dun & Bradstreet, where I ran the risk and compliance product organization. We had a number of solutions focused on risk management, supply chains, ESG. And my partner is based out of India. He comes from Zoho. He basically ran the partnership strategy and was instrumental in driving Zoho's CRM revenue to about $100 million. The ask right now is we're looking to raise a pre-seed round to validate and test and launch the marketplace. And that gives us about 12 months of runway with key hires in technology and the analysis team and the research team, as well as trying to onboard about 200 organizations over the next 12 months. That's it for myself. Thank you for your time and happy to answer any questions.
And thanks for the presentation. It's really interesting. Quick just question from the very beginning would be, you're raising 12 months of runway in a terrible economy. Why only 12 months? It seems like a bad idea.
Yeah, so we've been going back and forth in terms of the approach of whether we want to raise it for 2 years or 12 months. My original ask was actually for a 2-year period, about $2 million, but we wanted to test the marketplace because it is tricky to build up this two-sided model before we can actually raise. Then the idea is that basically in 2 tranches, 500K and 1.5, 500K to test it, verify it, make sure this concept actually works, and then about $1.5 million to scale into about 100,000 organizations. That's the goal.
Mm-hmm. And in terms of marketplaces, that would be the second place, is the economy's terrible right now and marketplaces models take a long time. Investors want to see revenue traction. They want to see a path to profitability, which is a really long and arduous path with marketplaces. What are your thoughts on that?
So the interesting piece about what we've been able to do is we actually been able to kind of do these assessments on these companies without actually asking for financing. So we can actually test the assessment model and actually launch these assessment capabilities for the organizations and start to generate incremental revenue while we kind of create this two-sided marketplace with the financial institution. We're actually in the process of testing it with one of my partners out of Australia, and she's actually opening up this assessment capability to some of the organizations in her network and her organization. She's a consulting firm that she works with, and so we can start to generate short-term revenue while we actually prove this marketplace actually works. Because that's I agree with you. It's difficult, it's complicated, and it's a two-sided model. But we have a way to at least drive incremental growth while we are pressure testing this concept of the finance marketplace.
Understood. And when do you expect to be able to reach scale with the marketplace? And which side will be the kind of early mover versus challenge?
Though I see the easier side, actually, the organizations asking for financing, requesting financing. I've had more activity in the last 3-4 months from the organizations than I've had in the last year, since we've kind of transitioned our strategy. Last year we had a slightly different strategy around how we want to take this to market. But yeah, it's been kind of interesting to see how organizations are actually coming to us for figuring out how to actually measure themselves for financing. The challenging side is really on the banking side, to figure out how to standardize this for the mid-tier segment. The large financing needs already exist, and it's a very complicated, long drawn-out process. It takes 6 to 9 months to get through kind of these green bond programs. But how do you take that and essentially translate it for the middle tier? Banks have to sign up for that, and obviously there's a risk of greenwashing, there's a risk of monitoring, verification process. All of that needs to be built out, and how can we actually scale? So I see that being probably a bigger challenge in the short term.
And it's a challenge that a lot of people are trying to solve. There's a lot of players that are trying to help with originating green loans. Why are you special?
So I think what we can do is, my background is in obviously data and technology. So I kind of come with that expertise to kind of bring in data and technology together. So I'm not looking to be a verifier on my own. I'm looking to be basically work with the right partners in the right ecosystem and create that unified view for organizations to scale quickly. So there are third-party verifiers. We built this level-based approach for assessments, right? In terms of, if you're trying to get a $100,000 loan, you don't need a complexity of like a certification agency or an audit agency, like somebody like a Deloitte over to assess that, right? But if you're doing a $10 million loan, you need to get that. So we've kind of built out this gradient framework, and I've seen this work in the past from a risk assessment framework with my my past life, and we're trying to bring that risk assessment model into the financing framework.
What's the biggest pushback you're having then?
So right now, I've not actually had any major pushback. I think it's just about getting the organizations, financial institutions specifically, getting them, kind of comfortable with the model. And so I think the real challenge is going to be for me to test this out, prove it out, and verify that, okay, this can actually work for them, right? Because that, I think, is the challenge. I think they're also skeptical, and, it's really about, nobody wants to be the first mover, especially in the banks and especially in this kind of risky environment around, financing today. So trying to find the right partner to work with who can take, kind of jump with us and innovate with us is going to be the biggest issue right now.
Especially with all the smaller financial institutions going under.
Exactly.
Those would generally be the earlier. I mean, Silicon Valley Bank or Republic may or may not be on the ropes as well,
Yeah.
like the players that you
Exactly.
would be doing. What does that mean for you? How does that change your approach?
It doesn't change my approach really. It's just that we have to be careful with our bond and with our capital, and kind of take it slow while we are able to test it. And that's part of the reason why I structured the financing to kind of have a small round first, just test it out, test the market out, get this proof points before we actually go for a bigger round.
Understood. Why are you the person to do this? Why is this your problem?
So I guess, I've been in the data measurement and analytics space for a while now. Like I said, my past background, I've been in kind of financial services for about 7-8 years, worked at risk management and Dun & Bradstreet, which is a data company, for about 8 years. And so I understand how companies can use data at scale to be able to drive measurement, reporting, and verification. And we even built workflow systems for very large corporates and even small and mid-sized companies. So with that background and the fact that my last initiative at my previous firm was actually focused on sustainable reporting, sustainability analytics, sustainable data. And so kind of combining data, analytics, sustainability together has been kind of a passion of mine, and I actually left my company to start this because I think there's a huge open opportunity here to tackle this problem, and nobody's really tackling it today effectively.
So it's more mercenary. You see an entrepreneurial experiment or experience or focus, and you go for that.
Yeah, exactly. Yeah.
Okay. What's the biggest weakness on your team?
So I guess my biggest weakness right now, I would say, is we don't have the right kind of background and talent to hire into the organization. specifically with the deep knowledge of the frameworks and standards. So we are kind of learning on the fly with the small team we have. But then it would be good to actually have somebody who understands the regulatory landscape, the financing landscape, especially around the sustainable dimensions, and kind of jumpstart that. So that's the biggest weakness. I know that's a key hire we want to hire as part of this funding. So that's one of the things I think if we get that right kind of hire, then I think it would accelerate our program much more effectively.
Is this a winner take all market, or is there going to be a lot of players that are moderately successful?
Yeah, I think there's going to be a lot of players in this space. I kind of equate this to trade financing. There's a number of organizations doing supply chain financing and trade financing today. There'll be ecosystems, and there'll be platform providers and financing providers, but I think it's going to be a pretty large market. And there's, effectively 400 million companies today that exist in the overall universe. And over the next 20, 30 years, pretty much everybody has to transform themselves to be a more sustainable organization. It's just going to happen. So I think you're going to have pockets of companies where there's regional focused or market definition focused or capability focused, but it's going to be a larger ecosystem than just winner takes all.